Hi everybody, good morning. This is Dan Sheridan. Welcome to another session as we look at opportunities in this coronavirus slash kind of bear market or pretty good correction. And today's a great day. SPX is up huge, as they say. Somebody in particular says that. 2373 up 135. And let's look at a couple strategies that I think are good opportunities in the current market. And so let's take a look at Apple. So if we look at Apple here, we're going to look at a long diagonal. Apple currently is at 239, almost 240, up $15 today. And I'm looking at a diagonal, which is basically a covered right substitute, except covered rights are going to cost you a lot of money. With the stock at 240, you got to put up $24,000 if you're going to do basically one covered right, because you're spending about $24,000 on the stock. So here's an example. I'm buying the May 15. I'm buying one May 15 call at the 200 strike. And as I said, right now the stock's about 240, so it's about $40 in the money. And that's kind of the stock surrogate, buying an in the money option, much cheaper than buying the stock. And then against it, I'm going to sell one April 24th, and I'm going to sell the 235 call. I'm selling it just a little bit in the money, about $5 in the money. You say, why? Well, the market's a little volatile, and I want to get a little more downside protection. This is a good start. Apple up 15, but Apple's been pounded pretty good lately. As it's gone through on the downside, its 200-day moving average is kind of bumping up against it right now. So, a little bit extra downside protection. And that diagonal's going for around $28, $2,800 for one, which is significantly less than a covered right. And again, that gives you a nice expiration break even around that 223, 224 with the stock at 240, which is great. And if you wanted a little more downside protection, if you're a little more nervous, we could go in and buy a put, maybe an out of the money put, and then you can see by buying the out of the money put, in this instance we bought one, same expiration as the short, April 24, 185 put. And what that gives us, if this is the expiration graph and this is the, we call this T+0 line or the graph today, you can see by buying the put, the curve, you see it kind of will end up going like that. Actually, will go higher because then the downside volatility will increase. So it's kind of a hedged position. And you say, well, what if Dan, Apple's up 15 today. I think this is maybe just a bounce. We're going to continue a little bit lower in the market, especially in Apple. They're just selling the iPhones. It's not like an essential good right now. How about kind of a diagonal for the downside? But I think it's going to trend lower from here, especially with this up 15 looking for a little bit down. Well, here's a put diagonal. So in this instance, I'm buying one of the May 15 280 put. So I'm buying an in the money put. It's a way to get short stock, but much cheaper. And then against it, I'm selling one, going back to April 24, just a little bit in the money put. I'm going to sell the 250 put with Apple currently around the 240 level. And again, the green line is the expiration graph. That would be expiration of the shorts, April 24, and the purple line is the T+0 curve today. So you see, you get this nice covered right, but for the downside, right? And again, same principle as a call diagonal. If you want a little more room on the upside, you could buy a call and, you can buy a call and you can see it'll slope that line up a little bit. So if we do have a big move up, you're hedged. Again, folks, if you like this kind of these strategies, I think these would be great in your long portfolio, looking out maybe a year or so, or you can use them short term. I'm going to talk about that. Again, I started a hedged volatility strategy series. Hedge strategy series. We're running 4 consecutive Saturdays. We did the last one last Saturday, and the next one's going to be this coming Saturday, March 28th. I'm going to talk about hedged long diagonals for the upside and the downside, and very specifically how you can get whatever protection you want to make you comfortable in this market, and whether full protection, half protection. And so I'm going to go through a lot of these ideas, numerous examples. Please go to our website, SheridanMentoring.com, and you can sign up for that. It's this Saturday. You can get all 4 of the hedge strategy series, or you can just get one at a time. A week from this Saturday, I'll be doing a hedged iron condor series. So I think this will be a good, a great series to take advantage of that can help you through this volatile environment. Thanks so much, everybody.